The market is once again on the verge of major change. New tariffs, a potential macro policy reversal, gold hitting all-time highs. But will Bitcoin follow the same path? What exactly is the Trump family preparing, and is crypto really in danger? And most importantly, what's happening with altcoins while everyone's watching only Bitcoin? So if you want to understand where the market is heading, hit subscribe, drop a like, and let's get started. Before we begin, this isn't financial advice. Everything I say reflects my own perspective and analysis. Use it as an additional point of view, not as a call to action. Let's start with Bitcoin's price. In my last video, I mentioned that we're sitting at a very critical level. Back then, Bitcoin was trading around $111,000, and I said that if we broke below the key support at $110,000 within the next few days, we'd likely move toward $108,000. Unfortunately, that's exactly what happened. So now let's talk about the real reasons behind this drop. And at the end, I'll share my thoughts on where Bitcoin could go next. One of the main reasons behind the current decline is the new round of the US-China trade war. It started with another wave of Trump tariffs, and analysts expect import prices in the US to rise by about 4%. China immediately fired back, accusing Washington of creating panic around rare earth metals and threatening its own export restrictions on strategic materials. The Chinese Ministry of Commerce called on the U.S. to immediately correct its wrongful practices. In response, U.S. officials went on the offensive. Treasury Secretary Scott Bessent warned that China's restrictions on rare earth metals could lead to a global decoupling from its economy. Meanwhile, U.S. Trade Representative Jamieson Greer stated that Beijing's actions were disproportionate and posed a threat to global supply chains, especially in the high-tech sector. However, he also clarified that U.S. and Chinese representatives plan to meet later this month to discuss tariff issues and bilateral trade relations. And to pour even more fuel on the fire, Donald Trump himself confirmed that the U.S. is officially in a trade war with China. Starting November 1st, he plans to impose 100% tariffs on a range of Chinese imports, from electronics to automobiles. Markets reacted instantly. Gold surged to new all-time highs, while stock indexes fell amid panic headlines. Yet, even in this environment, Jamieson Greer confirmed that a diplomatic meeting between the delegations is still on schedule by the end of the month, aiming to ease tensions. So, in the short term, yes, it looks scary. But in the bigger picture, we've seen this playbook before. Trump loves to make bold statements, create pressure, and then strike deals to pin a conflict resolution medal on his chest. So it wouldn't be surprising if in just a few weeks we see a classic turnaround, from fear back to optimism. Amid all the chaos we've seen in recent weeks, one surprising figure has suddenly started playing for the optimistic side. Yes, we're talking about Jerome Powell, the man the market has long viewed as the face of tightening and pain. But now, everything seems to suggest his tone is changing. During his latest speech, Powell gave one of the clearest signals yet. The end of quantitative tightening, QT, may be near. His words, "We may approach that point in coming months," sound like a direct hint that the Fed could soon slow down or even completely halt its balance sheet reduction. For the market, that's a huge sign. If QT ends, liquidity stops tightening, meaning pressure on risk assets decreases. That's exactly why investors are cautiously returning capital to the markets, as seen in the renewed inflows into ETF funds. Powell also admitted that the economy now looks on a firmer footing, but at the same time, acknowledged weakness in the labor market. Hiring and quits remain at low levels, which supports expectations for future monetary easing. Interestingly, the Fed now seems to be preparing for a delicate approach. Powell explicitly said he doesn't want a repeat of 2019 when overly sharp moves caused stress in money markets. He even defended the idea of continuing to pay interest on reserves, claiming it's necessary to avoid emergency asset sales and disruptions in rate stability. In my view, these are strong, positive shifts toward a more market-friendly tone. Historically, The end of QT has always been a green flag for a risk-on environment. By the way, if you want to get more macro insights like this, make sure to follow my Telegram channel. I post much more detailed analysis there. The link is in the video description. From Powell, let's move to the next major positive factor. The market is already pricing in a rate cut. According to CME data, the probability is quite high. Even open aggregators like GrowBeansprout and Femex are showing that traders aren't just hoping for easing, they're betting on it. And you can see this clearly in the charts. Gold is breaking new all-time highs. Kitco reports that this isn't a coincidence, it's the market's instinctive response to the Fed's coming pivot. When gold reacts like this, it's almost always a sign that the macro cycle is shifting. And since we've already talked about the Fed, it's important to note that they have a meeting scheduled for the end of this month. One more twist adding fuel to the story is the ongoing U.S. government shutdown. As of now, the Senate has rejected the temporary funding bill for the 10th time. The country is essentially operating in a partial freeze, halted payments and suspended data releases, a situation mainstream media is calling the longest political pause in a decade. But dig a little deeper, and it might not be just politics. There's growing speculation online that the shutdown could be an economic tool, not just a standoff. Some argue that Trump, who's been ramping up pressure on the Fed, could be using this crisis to push Powell toward cutting rates. And honestly, it makes sense. His ideal scenario would be a triple victory: ending the shutdown, announcing a rate cut, and de-escalating the trade war with China. Politically, that's the perfect combo. First I ended the chaos, now I'm bringing back stability. So by the end of October, we might get multiple positive signals at once. From monetary policy, from trade negotiations, and from the overall macro environment. And as always, the market will start reacting before any of it becomes official. Now let's move on to the part everyone's waiting for: the potential outlook for Bitcoin's next move. What picture are we seeing right now? Bitcoin is holding within the 107,000 to 112,000 range, and this is exactly where the next big move will be decided. Whether we'll see a new upswing or another retest lower depends on how long the key 107 to 110K support holds. If it breaks, the next stop could be around 98,000, and in the worst-case scenario, even 82,000. But for now, these levels look more like an extreme reserve rather than the base case. Still, charts alone don't tell the full story. It's also about the data. The Fear and Greed Index has dropped back into fear territory, 32 points, the lowest level in a year. Historically, these are exactly the moments when big players quietly start building positions. So despite all the panic, the market currently looks more exhausted than truly bearish. What scenarios do I see next? My base case for the next 2 to 4 weeks is sideways trading within the 107 to 115,000 corridor, followed by a gradual recovery toward 116 to 118,000. If macro conditions remain neutral and spot ETF inflows stabilize. A breakout and consolidation above 116,000, which is the trader's realized price zone, would be the first clear signal that the market is entering a new uptrend. What could help this move? Softer rhetoric around tariffs in China. A more dovish Fed stance. Sustained ETF inflows and a gradual rise in sentiment from 30 to 50. What could break it? A clean drop below 107K amid low liquidity. Continued whale distribution. Rising leverage without ETF inflow support. So right now, we're at a point of balance. On one side, fear, shutdown, and trade wars. On the other, Powell's reversal signals, a shift in tone, and even whales no longer betting against the market. Friends, thanks for watching. Don't forget to like, subscribe, and share your thoughts in the comments. And remember, this video is not financial advice, just my personal view on the market.